If you're thinking of buying a home in Texas in 2025, pause. You need to watch this first. Because right now, there are cities in the Lone Star State where buying a home could be one of the worst financial decisions you ever make. From skyrocketing property taxes to stagnant growth and homes sitting on the market for months with no offers, these places are waving big red flags. And yet, most buyers, especially first-timers and out-of-state investors, have no idea what they're walking into. Here at the Globe Realty, we've crunched the numbers, tracked the trends, and found the top 10 cities in Texas where you should not buy a home right now. These markets are seeing declining home values, oversupplied inventory, and in some cases, signs of a Texas housing market crash on the horizon. This isn't fear-mongering. This is data-driven insight to help you protect your money, your future, and your peace of mind. So before you sign a contract, make a down payment, or relocate to what seems like a booming market, pause. Watch this entire video. This is not your typical real estate hype. This is a data-backed warning you won't hear from most agents. Hit that like button, subscribe, and tap the bell so you never miss a market update. And drop a comment below if you've seen any red flags in your local market. Let's dive in. Number 10. Odessa, Texas. Just a few years ago, Odessa, Texas was buzzing with energy, literally. Fueled by the Permian Basin oil boom, homes were selling fast, prices were climbing, and it felt like you couldn't lose buying here. But now, that once booming market is sputtering. As of April 2025, the median home price in Odessa has dropped to about $276,500, down 4.6% year over year. And here's where it gets concerning. Home sales have collapsed, down 32% compared to last year. Just 94 homes sold last month, compared to 139 the year before. That's a major slowdown. So what's going on? Well, oil prices have taken a hit, and in a city whose economy is tied so closely to oil, that ripple is shaking the housing market. Homes are sitting longer, now an average of 27 days on the market, which is 12 days longer than last year. Inventory is piling up, and demand? It's fading fast. Let's be honest, would you feel confident investing in a market where the local economy swings with the price of crude? That's the risk in Odessa. When energy jobs dry up, people move out, demand drops. And suddenly, that home you thought was a bargain could be a liability. The long-term concern? You're not just buying a house, you might be locking yourself into a devaluing asset, all while property taxes and maintenance costs stay the same or rise. Have you ever seen a housing market unravel after a local industry declined? Drop your story in the comments. We want to hear it. And don't go anywhere. Because the city's coming up next, the red flags are even bigger. Number 9. Lubbock, Texas. Welcome to Lubbock, Texas, a place known for cotton fields, college football, and a cost of living that once made it a budget-friendly dream. But in 2025, Lubbock is no longer the sure bet it used to be for homebuyers. Let's break it down. The average home value in Lubbock now sits around $208,600, down about 2.4% year over year, according to Zillow, in April 2025. At first glance, that drop seems small, but dig deeper, and the picture gets murkier. In April alone, there were over 1,438 homes listed for sale. And back in January, active listings had jumped by 15% year over year, a clear sign that supply is climbing faster than demand. The market now sits at around 3.9 months of inventory, which sounds balanced, but here's the catch. Prices aren't moving up. In fact, they're stalling. That's a red flag for long-term buyers. Lubbock's economy leans heavily on education and agriculture, both stable sectors, but slow-growing. That's great for day-to-day living, but not ideal if you're buying for appreciation, equity growth, or investment. You could be holding on to a property that barely grows in value year after year. And let's not forget about affordability pressure. Many buyers here are on fixed or modest incomes, and as taxes and ownership costs rise, the local market may not keep pace. That means thinner margins, longer time to profit, and very little cushion if you need to sell quickly. So let me ask you, would you risk your long-term investment in a market where flat is the new normal? Would you rather go for stability or growth? Let us know in the comments below, and stay tuned because the next city on this list has even more warning signs waving in the wind. Number 8. Wichita Falls, Texas. Coming in at number 8, we're heading to Wichita Falls, Texas, a city with small-town charm, military roots, and deep agricultural ties. But beneath the calm surface, this housing market is quietly cooling and fast. As of April 2025, the median home price sits at around $190,000, down by 2.6% year-over-year, according to Redfin. That drop might seem subtle, but combine it with shrinking demand and you have a problem. Just 95 homes sold in April, a sharp 18% decline from the same month last year. That means homes aren't moving, and that's not just a seasonal hiccup. It's a signal. Inventory is rising and a buyer's market is quietly forming. For sellers, that means longer wait times. For buyers, it may feel like more options, but it also raises a critical question. Are these homes losing value before you even close on one? Now let's talk economy. Wichita Falls leans heavily on Shepherd Air Force Base and agriculture. Both reliable, but not exactly high-growth sectors. That limits upward pressure on home values. You're not likely to see a boom here, just a long, slow trickle. And that's the issue. If you're an investor looking for appreciation, or a first-time buyer hoping to build equity and one day trade up, what happens if your home doesn't gain value? What if it lingers on the market when you're ready to move? Would you buy in a city where demand is falling and prices are slipping just because it looks affordable today? Let me know your thoughts in the comments. Stick around, because the next city on our countdown, it's making even bigger headlines for all the wrong reasons. Number 7. Beaumont, Texas. At number 7 on our list, we arrive in Beaumont, Texas, a city where affordability may look good on paper, but beneath the surface, the housing market is showing signs of serious strain. Let's start with the numbers. As of May 2025, the median home price in Beaumont is around $215,000, down about 1.2% year-over-year. Not dramatic, right? But here's where it gets concerning. Active inventory has jumped over 16% month-over-month, with more than 823 homes currently on the market, according to Rocket Homes. That means one thing. Listings are growing faster than sales. Homes are stacking up. And when supply outpaces demand, what do sellers do? They cut prices to stay competitive. Buyers may feel like they're getting a deal, but in reality, they could be walking into a flat or declining market. Beaumont's economy leans heavily on oil, petrochemicals, and industrial manufacturing, sectors that are currently growing slowly, if at all. And here's another kicker. Beaumont has one of the highest property tax rates in Texas, around 2.1%. That's a big chunk for first-time buyers or retirees living on fixed incomes. So ask yourself this: would you invest in a market where values are slipping, inventory is surging, and taxes eat into your equity year after year? That's the trap many buyers don't see until it's too late. The housing feels cheap, but the long-term upside? Minimal. It's like buying a car with no resale value. Investors, beware. Beaumont's market is oversaturated, and if appreciation stays flat, your exit strategy may cost you more than you expected. Still think it's worth the risk? Let us know in the comments. Number 6. McAllen, Texas. McAllen, Texas, a city where the promise of affordability masks some serious long-term risks. On the surface, McAllen might look appealing. The median sold price in May 2025 hovered around $255,000, according to Rocket Homes, a figure that feels attainable in today's sky-high market. But here's what most buyers miss. The appreciation potential here is weak, almost flat. While prices have nudged upward slightly month to month, year-over-year growth is stagnant. And the median listing price, around $298K, is actually down 5% from last year. That's a red flag. So what's going on? McAllen is now firmly in a buyer's market. There are simply too many homes for sale, particularly in the entry-level range. Builders and sellers are competing hard, which might sound great if you're buying, but what happens when you're the one trying to sell? Add to that a property tax rate of around 2.3%, one of the highest in Texas. For a market where local income levels remain modest, those taxes hit harder. And with an economy based on retail, healthcare, and cross-border trade, job and wage growth isn't moving fast enough to support rising home values. For first-time buyers and retirees alike, that means high carrying costs and little chance of real equity growth. Investors, you're looking at longer holding periods, slower returns, and shrinking margins. So ask yourself, would you buy into a city where prices are flat, supply is overflowing, and taxes take a deep bite, just because the sticker price looks low. Let's talk about it in the comments. And stay close, because the cities in our top 5 are where the risks hit hardest, and the warning signs are impossible to ignore. We're halfway through our countdown of the top 10 Texas cities where you should not buy a home right now, and the trends are already sounding the alarm. Rising inventory, flat or falling prices, and heavy tax burdens. If you found this breakdown eye-opening so far, don't forget to hit that like button. It helps more smart buyers and investors discover this video. Got thoughts on any of these markets? Or maybe you're seeing similar trends in your area? Drop a comment below. I'm reading every one, and your input might just shape our next deep dive. And if you haven't already, subscribe to the Globe Realty so you never miss a crucial update in the ever-shifting housing market. Alright, back to the countdown. The cities in the top 5, they're making headlines for all the wrong reasons. Number 5, El Paso, Texas. Breaking into our top 5 is El Paso, Texas, a city that many see as stable and affordable. But when you look closer, the numbers tell a more complicated story. As of April 2025, the median home price in El Paso sits at $265,000, reflecting a modest 1.9% increase year over year, according to elpasox.com. That's technically growth, but in reality, it's basically flat, especially when you factor in inflation, rising insurance, and most of all, Texas' highest effective property tax rate, clocking in at around 2.6%. That's right, El Paso holds the unfortunate title of the highest property taxes in the state. And when appreciation is this slow, those taxes eat away at your equity, month after month, year after year. Let's talk inventory. With roughly 2,713 active listings in April, up slightly from the month before, there's a sense that supply is building, but not enough to stir a hot market. That's because El Paso's economy relies heavily on border trade and military employment, two sectors that are historically stable, but not exactly known for explosive growth. And that's the danger here. El Paso isn't crashing, it's sitting still. Slow price movement, minimal job creation, and high costs to carry property. For long-term investors, that's a slow burn. For first-time buyers, it's a risky trap, especially if you're counting on future appreciation to justify today's purchase. So ask yourself, would you tie up your money in a market where your taxes rise faster than your home's value? Is safe and steady really safe if you're not getting ahead? Let me know what you think in the comments. Stick around, because the next 4 cities, they're flashing even bigger red flags for home buyers in 2025. Number 4, Fort Worth, Texas. Sliding into the number 4 spot on our list is a Texas powerhouse that many didn't expect to see here, Fort Worth. Once considered one of the Lone Star State's fastest-growing housing markets, Fort Worth is now showing serious signs of fatigue. The numbers don't lie. In the quarter of 2025, the median home price hovered around $330,000, inching up only 1.5% year over year, according to Leaguer.com. But here's where things get interesting. Inventory has risen sharply, from 2.7 months to 3.4 months in just 1 year, and homes are taking much longer to sell, with the average days on market now stretching to 94. That's not just a slowdown, it's a shift in power. Fort Worth has quietly gone from a hot seller's market to neutral territory, where buyers suddenly have leverage. At the same time, new listings are up 25% year over year, flooding the market faster than buyers can absorb them. And that matters, because when supply keeps growing while demand drifts, home prices flatten or fall. Now add in Tarrant County's steep property tax rates, between 2.3% and 2.4%. For homeowners banking on price appreciation to offset those taxes, this soft market could mean years of just breaking even, or worse, slipping into negative equity. So here's the real question. Would you invest in a market where homes are sitting longer, taxes are high, and price growth can't keep pace with inflation? Is Fort Worth still the golden opportunity it was in 2021? Or are we staring at a city that's already peaked? Sound off in the comments below. Your insights make this a two-way conversation. And keep watching. We're heading into the top 3, and the warning signs only get louder from here. Number 3, San Antonio, Texas. Coming in at number 3 is a city known for its history, charm, and until recently, red-hot housing market. But now, San Antonio is sending a very different signal to homebuyers. As of March 2025, the median home price sits at approximately $315,000, reflecting a meager 2% increase year over year, according to cooperrealty.blog. Flat growth isn't necessarily alarming until you pair it with what's happening beneath the surface. Active listings have surged by 18%, reaching nearly 14,716 homes on the market. That's 5.1 months of inventory, just shy of buyer's market territory. Meanwhile, monthly home sales dropped by 8% year over year. Translation: demand is cooling, supply is rising, and that combination spells trouble for future appreciation. But it's not just about the numbers. San Antonio's fundamentals are shifting too. Population growth has slowed. Income growth also cooling. And yet, the number of homes continues to balloon. Add to that an effective property tax rate around 2.03%, and buyers face rising costs just to hold property in a market that's losing steam. Think about it. Would you invest in a city where home supply is outpacing demand and values are barely ticking upward? If you're a first-time buyer, could you resell in 3 to 5 years without taking a loss? And if you're an investor or retiree, can you really count on gains in a city where the fundamentals are drifting sideways? San Antonio may still be vibrant, but as a real estate investment, the outlook is dimming fast. We're down to the final two, and trust me, they are the biggest caution zones in Texas real estate right now. Stay tuned. Number 2. Austin, Round Rock, Texas. Coming in at number 2 on our countdown is the legendary Austin Round Rock metro area, a place that just a few years ago was the crown jewel of Texas real estate. But as of early 2025, the story has shifted dramatically. The median home price here is about $430,000, according to unlockmls.com, which might sound high, but the real kicker? That number is actually down about 2.3% year over year. In a city known for skyrocketing prices, this is a red flag. Why? Because the market isn't just cooling, it's showing real signs of stress. Inventory is climbing fast, with about 5.3 months of supply between March and May 2025, and active listings are up nearly 19% year over year. Meanwhile, home sales have slowed sharply, down over 9% in the first quarter alone. The takeaway? Austin's once red-hot housing market is shifting into neutral, maybe even reverse. Now let's talk carrying costs. Property taxes in Travis County, plus the city, hit around 2.2 to 2.3%. That's a hefty monthly burden for any homeowner, especially with mortgage rates still elevated. So here's the big question for long-term buyers, investors, or anyone thinking about calling Austin home. Is this plateau in prices the calm before a storm? Are affordability issues and rising taxes enough to stall what was once one of the fastest appreciating markets in the country? Would you bet your money on steady gains or a market that's starting to plateau and potentially slip? Austin's boom days might be behind us, and the next chapter looks a lot more uncertain. Stay tuned. Our number 1 city to avoid is coming up next, and it's a Texas market that's raising serious concerns. Number 1. Galveston, Texas. Topping our list is Galveston, a city that's seen better days in real estate, and right now it's warning every potential homebuyer to think twice. As of April 2025, the median single-family home price has plunged nearly 13% year over year, dropping from about $449,250 down to roughly $399,750, according to moneywise.com. That's a dramatic decline in just 12 months, a clear signal something's deeply wrong. What's causing this slide? First, the market is flooded with inventory. Listings have surged by a staggering 42% year over year, with around 1,000 homes available in early 2025. That means a jaw-dropping 17-month supply, almost 3 times the balanced market norm of 4 to 6 months. Imagine how long that feels if you're trying to sell. But it gets worse. Galveston's market was recently hit hard by a wave of short-term rental owners unloading properties, desperate to cut losses as prices plummeted. Many homes are now sitting unsold for 6 months or more, trapped in a sluggish market, and the financial burden on homeowners is crushing. Insurance costs average about $12,000 a year. That's astronomical for most families. Plus, property taxes have climbed, squeezing budgets tighter than ever. Now ask yourself, would you invest in a city where the supply vastly outstrips demand and prices keep dropping? How do you feel about owning a vacation home with sky-high insurance and tax bills that eat into your returns? Is this a market that's ripe for a rebound, or a cautionary tale for long-term investors and retirees? Galveston has transformed into a true buyer's market, but the outlook for price appreciation? It's bleak. This is the top Texas city where buying now could mean serious risk. And there you have it, the top 10 cities in Texas where you should not buy a home right now. From Galveston's flooded market and sky-high insurance to Austin's plateauing prices and rising taxes, the Lone Star State has some serious red flags for buyers in 2025. If you're thinking long-term investment or even buying your first home, it's crucial to know where the risks lie and which markets might leave you stuck with a depreciating asset or an uphill battle to resale. Remember, real estate is local, and timing is everything. So don't rush in just because a city sounds hot. Watch the trends, understand the numbers, and ask the tough questions we've raised today. If you found this countdown helpful, make sure to like, subscribe, and hit that notification bell so you never miss our deep dives into Texas real estate. Drop a comment below. Which city surprised you the most? Or is there a Texas market you want us to analyze next? Thanks for watching the Globe Realty, where we turn data into decisions. Stay smart, stay patient, and I'll see you in the next video.